going on, guys? And today I'm going to be going over the importance of understanding when the low and the high of the day are made. You're never gonna know when the low and the high of the day are gonna be made, but with the few characteristics that I'm going to tell you guys to be looking for on a daily basis when you're looking at the charts, you're going to be able to get a better understanding of understanding when the market is likely to make the low or high of the day. So let's just get straight into it. So the first thing we're going to be paying attention to is London session. London session has a very high chance of making the low or the high of the day from around 1 a.m. to 4 a.m. Usually I give it to like 1 a.m. to like 3:30. That's when it's usually made, from like 2. But I say from 1 a.m. to 4 a.m. there's a high chance that London makes the low or the high of the day. And I'm going to show you guys how to find that. So we're just going to go to random places in time. So understand, guys, that this line in the middle is the 12 a.m. So after 12 a.m. is usually London session. So if I put my Asian session right here, you can see that this blue box is the London session. So right after the Asian session, a few candles after this midpoint at 12 a.m. is when the London session is shown. So I'm just going to show you guys that so you can see. So you can see in this example here, we're going to go from 1 a.m. I'm going to draw a line from 1 a.m. 4 a.m. So from here, this is where we're going to be looking for. You're going to be looking for, basically you're going to look for false breaks or liquidity grabs. And if you don't know what a liquidity grab is, it's basically a stop run, if you guys might know what that means. So it's basically when you have a run above a high and then quickly have a reversal afterwards. And what this does is grabs the stops and all the orders from above these highs to then go even lower. So if you ever got stopped out and the price went in your direction afterwards, that's an example of a stop run or liquidity grab. And that's what you're going to be looking for during London session from 1 a.m. to 4 a.m. And if this happens, then you know that there's a high probability that this is going to be the low or the high of the day. And as you can see right here at 4 a.m., we didn't necessarily have a stop run, but you can see we had this run below these lows here. And in this case, price never came back to this low through this whole day. So this would be an example of the London having an almost stop run. It made relative equal lows, but I'm going to show you better examples. So for example, let's see, look for another one right here. We're going to be looking from 1 a.m. So from this line to 3 a.m. not 3 a.m. 4 a.m. right here. And you can see in this case what happened. At 2 a.m. we had a run below this low right here. And then what happened? We traded up immediately and started closing above. So when we woke up around New York session around 8 o'clock, start looking at the charts and we see this, we know that there's a high chance that this could possibly be the low of the day. Why? Because it had a liquidity grab. So we're expecting the bigger banks and the bigger traders with most of the money to continue pushing the market in one direction, because we know when the market makes moves like this isn't retail traders moving the market. This is big institutional traders with big money. They pushed the market down, got the orders to now bring it up, and you can see that what happened. Price never came back down. We had a small retracement back to this order block here before trading above to clear these highs, before having another example of a false break and then trade even lower. So that's another example of the London session making the low of the day. Let's look for an example of the London session making the high of the day. And when you see these setups, when you see that the London session could possibly make the low of the day or the high of the day, when it has these characteristics, when it has these liquidity grabs, you understand that New York session has a probability of just having a retracement to then have a continuation of this London trend. So I have my video on the two setups I look for, the New York reversal and the London continuation. And this video is going to be further going in depth of why I look for certain things to happen. So let's look for another example of the London session making the low or the high of the day. So I can show you. I'm going to just go to a random point. And we can see right, just trying to eyeball it, right over here. We're going to be looking from 1 a.m. to 3 a.m. In this case, is a little range is not very nice, but you can see that up here at this time, it wasn't even a liquidity grab. This is a bad example. I'm trying to find examples somewhere close. So we're going to be looking from 1 a.m. to 3 a.m. So we're going to be looking for the same thing we're looking for when it creates the low. We're going to be looking for a possible liquidity grab or a false break above a high. And as you can see right here, we came close to this high. We didn't close above the wick, but you can see if you go from the bodies of the candles, we had a false break above the bodies of the candles. At what time? 3:30, 4 a.m. Then what happened? Price immediately traded lower. Then what did we have at New York session right here? We had that retracement, then continued that overall London trend. And then where did we have a retracement to? Back to that old high that we had a false break of during this London session. So we created the high of the day. Then we had a retracement during New York to continue London's trend. So you can see another example. And guys, mind you, this isn't going to happen every single day, but you're going to find setups like this every single week. You're not supposed to be trading every day. You can find setups like these 2-3 times out of the week if you look for them and you're paying attention to these certain characteristics. If you just look, and mind you, you don't have to believe me. Go onto your charts, check your pairs, and look at it yourself. I'm just going to tell you guys what I know and what I've seen happen, and then that's it. So now we're going to be going over when the New York session creates the low or the high of the day. So for the New York session, you're going to be looking for the low or the high of the day to be made from around, I say, 7 a.m. to 10 a.m. Or you could say 11 a.m. too, but with US 30 personally, is from 7 a.m. to 10 a.m. is when I notice happens the most. So you're going to be looking for the same thing you look for when you're looking for the high or the low of the day during the London session. You're going to be looking for the high or the low of the day during New York. What are we going to be looking for? We're going to be looking for potential false breaks. So in this case, you can see during the New York session, we had a run above these highs. We traded into a order block all the way up here. Then what happened? Price immediately started to trade lower, targeting these lows and these lows all the way down here. So it's literally the same thing. You're just looking for certain characteristics to be made during certain times of the day. You can see that we had a false break, traded above this high, traded into an order block. If you even pull your fib from this high to this low, you can see we also were respecting this fib. So we have multiple confirmations, and all we're looking for and all we're taking into account is if this is a reversal scenario, then there's a high probability, because we traded into an order block, we traded into this, we traded above this old high, so we have the highest chance of being closest to our stop loss. Because if you get into a trade up here, understanding that this is a false break, maybe you get in here or something, you have your stop loss all the way above this high. But you have the best chance of being able to catch this full move because you're the closest to the stop loss, because you're selling high and you buy low. That's all you're doing. So this is another example. I'm going to find you another one of the New York session creating a low or the high of the day. So, right here. Right here, you can see during New York session at 9:30, we traded into this order block all the way down here. But what else did we do? We had a false break below this low. We broke below this low, traded into this order block at New York session. We were creating the low of the day. Then we had a reversal and then traded to get the liquidity from above this high up here, from these highs right here. But what are we paying attention to? We're paying attention to the fact that we had a false break below this low, traded into an order block, then had an overall reversal during the New York session. And then this ended up being the low of the day. So you see what I mean, guys? This isn't a strategy by itself, but you can use these characteristics to overall form a buy. So if you take into account, if you look back in time and you see that during the London session, you had a false break above or below an old high, and you traded above, you started pushing the other direction immediately, then you know that there's a high chance that you could overall continue that trend during the New York session. Same thing with the New York session. If you see that you're creating a new high or new low during that time zone I told you, and you're trading into an order block or another form of support resistance, order block, a breaker block, any of those things, maybe you're trading into a 35,000 level, any of those things. But you're overall trading above an old high and you trade down immediately and you look to like you're going to reverse, and there's a high probability that during that time there could be an overall reversal of the daily range. So that's all you got to keep into account. These aren't things that are going to make or break your trading system, but these are all things that are going to teach you to get more in depth when you're looking into the market, and you're going to overall understand what the market is more than likely going to do. Because when you pair these characteristics with the understanding of liquidity, understanding where the market is likely to go based off of the higher time frames, understanding time of day, then it's all gonna click and you're gonna be able to read the story that the market is giving you. So hopefully you guys learned something. Hopefully this video is helpful. Hopefully you're able to put these concepts to back testing, forward testing, and understand it yourself, because I know you're not all going to believe me just telling you. You're going to have to witness it for yourself and understand that. So if you found this video helpful, make sure you like, comment, and subscribe, and I'll see you guys in the next video.